The KASPA Foundation and its limitations. KASPA operates fundamentally differently than most blockchains out there. It's a high-throughput proof-of-work network that uses block DAG technology, which allows parallel block confirmation instead of that usual sequential processing. That kind of architecture delivers low latency and actually maintains true decentralization through mining, solving scalability without sacrificing the security model that makes Bitcoin so valuable. But there's been one critical gap. KASPA has no native smart contract support. That's not just some oversight, it's really an architectural choice that prioritizes throughput and finality over Turing-complete computation. The trade-off here delivered performance, but, well, eliminated entire categories of applications. No DeFi protocols, no decentralized exchanges, no lending markets or stablecoin issuance, no NFT infrastructure or gaming applications. KAS existed primarily as a store of value and a medium of exchange. Both are valuable functions, but honestly, they're limited compared to ecosystems like Ethereum, Solana, or Avalanche, where smart contracts enable all sorts of composable applications. Developers who wanted to build on KASPA, well, they had nowhere to deploy code. Users who wanted to participate in DeFi had to bridge assets elsewhere, which ended up fragmenting liquidity and diluting those network effects. This created a classic chicken and egg problem. Without smart contracts, developers just couldn't build applications. And without applications, users had no real reason to hold KAS beyond, speculation. Without user activity, there was no economic incentive to expand infrastructure. So, the ecosystem was technically impressive, but functionally constrained. Enter Dymension, a rollup launchpad specifically designed to add smart contract layers to blockchains that don't natively support them. Instead of forcing KASPA to rebuild its base layer architecture, Dymension creates a compatibility layer that preserves KASPA's strengths while eliminating its limitations. This is modular blockchain design at its most practical. The Beyond Upgrade and KAS utility expansion. The Beyond Upgrade fundamentally transforms KAS tokenomics by enabling it as a launchpad asset within the Dymension ecosystem. Here's what that means practically. KASPA community members can now fund emerging projects directly on Dymension using KAS. Projects can raise liquidity denominated in KAS, create trading pairs on Dymension's embedded DEX, and deploy entire applications where KAS functions as the native gas token. This creates immediate, tangible utility for KAS beyond holding and transferring. Developers building DeFi protocols, stablecoin systems, NFT marketplaces, or gaming economies can denominate everything in KAS while leveraging smart contract functionality that KASPA's base layer doesn't provide. Users can trade KAS pairs, provide liquidity to earn fees, and interact with applications, all while KAS captures value from increased usage. The economic implications are significant. Every rollup deployed through Dymension using KASPA for data availability creates demand for KASPA block space. Miners processing that data earn fees from rollup activity, not just base layer transactions. That expands KASPA's revenue model beyond simple payment processing to include data availability services, a market currently dominated by Ethereum, Celestia, and Avail. Projects launching on Dymension with KAS liquidity create buy pressure and holding incentives. If a project raises funding in KAS, those tokens get locked in liquidity pools, treasury allocations, and operational reserves. If applications use KAS as gas, users must acquire and hold it to interact with those applications. This is organic demand generation from genuine utility, not artificial burning or staking mechanisms. The embedded DEX is particularly strategic. Trading pairs denominated in KAS mean every swap generates volume, liquidity provider fees flow to KAS holders providing liquidity, and price discovery happens within the KASPA adjacent ecosystem rather than forcing users to external exchanges. That reduces friction, concentrates liquidity, and keeps economic activity circulating within the network. Before we break down the validator bridge architecture, and this is critical for understanding security guarantees, hit that like button right now if this infrastructure analysis is connecting dots you hadn't seen before. Seriously, most channels cover price action and ignore the technical developments that actually drive long-term value. We're diving into architecture here. If that resonates, subscribe and turn on notifications so you never miss these breakdowns. We're building a community that understands technology before markets price it in. Now let's talk about how cross-chain transfers actually work. Validator bridge and cross-chain security. The validator-powered bridge is what makes this entire integration possible while maintaining security. Here's the technical flow. When users deposit KAS on KASPA's base layer, Dymension validators observe those deposits, verify them independently, and sign the transaction off-chain using a multi-signature threshold scheme. Once consensus is reached among validators, wrapped KAS or wKAS gets minted on Dymension representing the locked KAS on KASPA. Alright, so here's the deal. The KAS on KASPA isn't burned or destroyed, it's actually locked up in a validator-controlled address. Think of the wKAS on Dymension as a claim ticket for that locked KAS. Now when users want to make a withdrawal, they burn their wKAS on Dymension. Validators then observe this burn event, verify it through their consensus mechanism, and unlock the corresponding KAS on KASPA's base layer for withdrawal. It's a pretty neat system if you ask me. This architecture is designed to avoid single points of failure, which is super important. There's no centralized custodian holding onto everyone's KAS. Instead, a decentralized validator set collectively manages the bridge using cryptographic signatures. This means that even if individual validators go offline or act maliciously, the bridge keeps on operating. It only requires a threshold majority, not unanimous agreement, to function smoothly. The security model here is quite interesting. It parallels how proof-of-stake networks secure state transitions. Validators have economic incentives to behave honestly. After all, they're staking capital that gets slashed for any misbehavior. Plus, cryptographic mechanisms are in place to prevent any single validator from making off with funds. For rollups posting data to KASPA, Dymension validators enforce valid state transitions while KASPA provides the immutable data availability layer. It's a robust setup, really. This separation of concerns is, honestly, architecturally elegant. KASPA doesn't need to validate smart contract execution. It just needs to store transaction data immutably and, cheaply. Dymension handles computation and state management. Validators ensure the bridge between these layers operates trustlessly. Each component does what it's optimized for, and the composition creates capabilities neither system had independently. So, rollup infrastructure and EVM expansion. KASPA rollups work by posting transaction data to KASPA's base layer, while Dymension validators enforce state validity. Think of KASPA as the permanent record keeper and Dymension as the computational engine. Rollup creators can deploy entire applications where KAS functions as the gas token. Users pay fees in KAS to execute transactions, and all transaction data gets anchored to KASPA for immutable verification. This model, honestly, boosts KASPA's block space demand dramatically. Every rollup posting data creates fee-generating transactions that miners process. As more applications deploy, miners earn from data availability services in addition to base layer transfers. That strengthens miner economics and security budget without requiring inflation or, complex tokenomics changes. For developers, this really opens up a genuine innovation space. You can build DeFi protocols, lending markets, decentralized exchanges, derivatives platforms, using KAS as collateral and denomination. You can create stablecoins backed by KAS reserves. You can deploy NFT marketplaces or gaming economies where in-game assets are tokens and KAS is the native currency. All of this becomes possible without asking KASPA to compromise its proof-of-work foundation. The upcoming general-purpose EVM KASPA Layer 2 is the expansion that connects KASPA to Ethereum's developer ecosystem. EVM compatibility means any Solidity smart contract can deploy on KASPA's Layer 2 with minimal modification. Developers familiar with Ethereum tooling, Hardhat, Remix, Truffle, Web3 JS, can build on KASPA immediately without learning new languages or framework. This isn't just theoretical. Projects can already create trading pairs on Dymension's DEX, provide liquidity denominated in KAS, and start building applications. The infrastructure is operational now, not promised for some distant future. So, early projects that are deploying today are able to capture first-mover advantages in liquidity, user acquisition, and, ecosystem positioning. Beyond DeFi infrastructure, the Kasia app is introducing privacy-focused utility, like encrypted chat and file storage, all secured by KASPA's blockchain. This really adds another dimension to KAS utility, since users pay for storage and messaging services using KAS, which creates demand from non-financial applications as well. Privacy-conscious users who are seeking alternatives to centralized platforms now have a blockchain-secured option, where KAS actually functions as the access token. And, price context definitely matters for timing. KAS is currently trading around 4.4 cents, down about 2.17% in the last 24 hours, but trading volume spiked 23.44% to $80.18 million. Volume increases during slight price declines often signal accumulation rather than capitulation. Participants are trading actively, which suggests that interest really hasn't waned, even though there's some short-term price weakness. If this infrastructure breakdown just shifted your understanding of where KASPA is heading, do two things immediately. First, subscribe so you catch follow-up coverage as rollups deploy and applications launch. And second, drop a comment telling me which aspect intrigues you the most. DeFi infrastructure, EVM Layer 2, or privacy applications. Are you already holding KAS? Maybe you're watching for rollup deployments? Comment below. I respond to thoughtful analysis, and honestly, your perspective shapes future content. Listen, I appreciate you staying until the end for the complete technical breakdown. Most traders focus on price charts and miss infrastructure developments that create actual long-term value. You stayed for the architecture analysis, which means you're positioning based on fundamentals, not just momentum. That's how sustainable portfolio growth happens. Before you leave, I've got another video breaking down 3 proof-of-work blockchains adding smart contract layers through similar modular designs. If KASPA's integration with Dymension intrigued you, those projects will absolutely interest you. Link is in the description and on your screen right now. Remember, in crypto, technological expansion that solves real limitations without compromising core strengths creates asymmetric opportunities. KASPA just added smart contracts, DeFi infrastructure, and cross-chain interoperability while keeping proof-of-work security. The base layer didn't change. The ecosystem possibilities did. That's expansion worth understanding deeply. This is TJ from TJ Crypto World. Stay focused on architecture, ignore short-term noise, and I'll see you in the next breakdown.